Welcome, dear students, to our final presentation for Chapter 3 on everyone's favorite topic to hate, taxes. And in this presentation, we will discuss some aspects of tax preparation, information sources, professional help, and software, auditing, and then take a look at some strategies for reducing your taxes. So let's get started on slide 33. The IRS has several methods of assistance, and it used to be that they were very unhelpful, folks. They were just miserable. There's no other word for it. And the Congress jumped on top of them and screamed and hollered, and they got better. And lately, and I don't think it's their fault now, they've gotten worse. I think it's because the Congress has not been giving them enough money, enough resources to do their job. So you used to be able to call them up, and they were very helpful. But now you can't even call them up most of the year. You can only call them up during tax time, and even then it's hard to get through. And I don't think it's their fault. I don't think it's their fault. I think it's the fact that they're just being asked to do too much with not enough resources. But that's my opinion, and I'm not sure because I don't work there. Their email service used to be great. I haven't used it lately, but it was very effective. They would get back to you within a couple of days, and one time it took them a longer time, and they sent me a message saying, "We're still working on it." It was a tricky question, and finally they get back to me. Tax publications are plentiful, but the one that's the most well respected is J.K. Lasser's Your Income Tax. So check that out, along with publication 17 that the IRS publishes, and we have a link to that on the website. And then there's the Infernal Net, which has literally thousands of tax-related websites, some of which are good and some of which are not so good. But the IRS website is actually pretty decent, folks. Check it out. And in fact, that's what we hope you use for part of the assignment when you do your research. Many of you will just do a search and find whatever, but be careful because there's a lot of misinformation, and there's also a lot of many websites which are just out of date, and the person has never updated them, and you wind up going there and finding information that's 5 or 10 years old. So be careful. What about tax preparation software? Well, TurboTax is certainly the most popular and the one you hear the most about. It's owned by the same company that makes Quicken and QuickBooks, and it's very good. But there are others. H&R Blockheads. I'm sorry, H&R Block at Home, TaxAct, TaxSlayer. There are dozens. Many of them now allow you. They prefer that you use your browser on the internet. Personally, I still use TurboTax. I didn't use it. I used spreadsheets for many years, and then one year I thought, I better check my. I'll see. I got a really good deal on TurboTax, free. Somebody gave me their copy because they weren't using it, and I tried it, and I was doing a very good job. So and I found that it's pretty darn easy to use. So I've been using that ever since. Of course, if you qualify, as I said before, and we'll say again, go to the VITA, whatever it is, Volunteer Income Tax Assistance here at Southwestern, and have your taxes done there. If you need the help of a professional, and most people don't, especially after they've gone through the Form 1040 enough times so that they kind of understand what they're doing and they don't have any special situations, such as owning a business or a farm or whatever. You don't really need tax preparers, in my humble opinion. They don't know much more than you do after taking this class. Certainly, if you become a VITA volunteer, you'll know pretty much what they know. Enrolled agents, CPAs, tax attorneys, these are professionals for which you're going to pay a lot of money, but they're worth it. If you need them, they are worth it. Enrolled agents are government-approved tax experts, and they're usually ex-IRS agents. CPAs are accountants who have taken a full battery of exams and really must stay up to date on what's going on. And, of course, an attorney is someone who's passed the bar and it's supposed to be very well skilled, and of course there are wonderful attorneys and not so wonderful attorneys. So be careful, get a good referral. As we said, the VITA program here at Southwestern is awesome, and after going to it and having your taxes done there, you might even decide you want to be a volunteer next year. If your professional tax preparer makes a mistake, who's responsible? You are, folks. You signed it, right? So you have to be careful. For this reason, it is important to at least understand the forms you're signing and check that the numbers are reasonable. There used to be, and I'm sure there still are, very unscrupulous individuals who say, how much did you pay in taxes last year? Oh, I don't know, $5,000. How would you like to pay $500? Yeah, okay. I'll do your taxes for you. Don't ask any questions. Just sign right here. And then they've gone to another town, and then the IRS sends you a friendly little letter, official business only, saying, you made all these deductions, please send us the receipts, and you don't know what. Yeah, right. Folks, it happened. It happened. In fact, it happened to a judge once. This judge, he claimed ignorance, but they still disrobed him or something. I forget. I don't know what else criminal penalties he had. But it was obvious that the person who had done his taxes was a scam artist, and he probably knew what was going on. Slide number 36. Speaking of scams, people are always worried about tax audits, and the news is good. Unless you're trying to hide something, if you get audited, it's usually because of some arithmetic error or something else. We were audited once, and I got a friendly little letter, and of course it scares you to death, saying, you know, this is how much they said you made, but you said you made this much. Well, it was an error. It was an error on their part, not my part. And I looked at it and I went, oh my goodness. So I contacted the people who had made the mistake, and they said, oh, we're so sorry. Got a copy. They sent the IRS, but I also made a copy and sent the IRS and got a letter back saying, thank you, the issue has been resolved. So if you claim large or unusual deductions, you are more likely to be audited. There are three types of audits. The correspondent audit, and that's the one I had. They will send you a letter saying, hey, you said you gave $500 to Father Joe's village or something, you know, Father Joe's charity. Send us a copy of the receipt. So you send them the copy of the receipt, and they send you back a letter saying, okay, thank you. The office audit is a little trickier, right? They want you to come in to see them. And they say, bring this, that, and the other thing. And you bring that, this, that, and the other thing, and you say, yes, sir, goodbye, sir, no, sir, yes, sir, thank you. Don't try to finesse. And if you really do feel you need help, you need to contact an enrolled agent, a CPA, a tax attorney. The most complex, the most dangerous, is the field audit. The IRS thinks something's going on. They smell smoke or they see smoke and they're looking for a fire. If you are asked to do a field audit, that's when you need to hire an enrolled agent, a CPA, a tax attorney, and you give them all the records, and the field audit is done at their office. You do not want to be your own representative. You need somebody who knows what they're doing. And you have audit rights. They can't just call up and say, we're coming tomorrow. They have to give you time. So which one do you want to avoid like the plague? The field audit. If you're going to get audited, which is the best one? The correspondence audit. Tax planning strategies. So let's take a look at slide 37 now. I'm sorry, 37. There are two types of ways to reduce your taxes. There is tax evasion and tax avoidance. Which one do you think is legal? Tax avoidance is perfectly legal, folks. It is your duty, your right, your responsibility to pay the fewest number of dollars in taxes as you are legally able to do. No more. You shouldn't pay any more than you should have to. Tax evasion, on the other hand, well, my understanding is they allow you to serve your time on the weekends so that you can go back to work and pay them the taxes you owe them. This was not me. I did not go into the office, but my brother-in-law, who is a great guy, but had a little problem. He had to go into the office and talk with the IRS agent. And nothing serious, but there were some things that were out of kilter. And he got it all resolved. Everything worked fine. But as he was there, he related a story to us that just sent chills up and down my spine. This was in New York, outside New York City in Long Island. He said he saw a gentleman in a 3-piece silk suit, beautiful suit. The suit must have cost a couple thousands of dollars. Sitting there crying hysterically. Obviously, they had caught him. They had found the books that he had hidden or whatever, however they caught him. So please don't do anything illegal, folks. Don't hide income. Don't pad your expenses. Pay your fair share, but nothing more. And part of the new tax bill was to help companies, as the saying is, repatriate, bring the dollars that they had been storing overseas back to the United States because of the tax laws kept them to pay, allowed them to pay fewer taxes by leaving the money they made overseas. And supposedly that's going to help now. So that's one good thing, supposedly, I don't know, we'll see, that's come of the new tax bill. Probably anyway, let's continue. Slide number 38. How about putting money in tax-deferred investments? Well, you have to be careful. Some are good, some are not so good. Tax-deferred annuities. Don't worry, folks. We'll skewer insurance companies and real estate agents and stockbrokers, but these are tax-deferred annuities. Annuities are sold through insurance companies, and they are normally very bad ideas. They have very high fees. Now, I'm an insurance agent. I could sell these things. We'll talk about these later when we get to investments. Series EE U.S. Treasury bonds, yawn. They're a good deal. Not really, but they don't pay very well, but hey, they're backed by the Treasury. And if you use them for education, higher education, you don't pay taxes, which is kind of cool. So that's why they're very favorite gifts of aunts and uncles to newborn children or grandparents to newborn children. Now, how about tax-deferred retirement plans? All right, now we're talking, and we'll discuss these in detail later on. 401ks, 403bs, traditional Roth IRA, Roth is better. Educational IRA, 529 plan, the Roth is better. KIOs, Simples, SEPs, these are great vehicles. They're not perfect, nothing is, but we'll discuss these in detail later on. And then buying and holding investments for the long term allows you to pay lower taxes in the form of capital gains taxes as opposed to income. Slide 39. Finally, the biggie, folks, and the one that the real estate agents have been jumping up and down waiting for me to get to, is the owning of a home. Owning a home is one of the best shelters because you can deduct the mortgage loan interest and property taxes when you itemize, and this reduces your taxable income. This is a paid advertisement from your friendly local real estate agent. As we're going to see, the tax savings are not as great as the real estate agents say they are for certain segments of the population. You can use your home equity line of credit to buy a car or consolidate debt. Oops, that was okay in 2017, but that's being eliminated in 2018. And some people are not too happy about that. Tax-exempt investments such as muni bonds, for the vast majority of us working grunts, it turns out that these things are really not that great. They're great for the wealthy, as we'll discuss later on when we get to investments. And then starting a business, the ultimate investment, not a hobby, folks, a business, can be a very, very good way to reduce your taxes. But first, it's a business first. You have to make money, and we'll discuss this later on. But let's turn our attention to home ownership, because by far that's the most popular way for people to reduce their taxes. Now let's take a look at a single person and a married couple who have $50,000 of adjusted gross income. So we're looking at the top of page 1 in the 1040 form, where we put all our gross income, and then the bottom of page 1 we took our adjustments to income, and now we're at the top of page 2. You have gone over the 1040 form a few times, right? Yes, nod your head, yes, I can see you, thank you. All right, so what happens? In 2017, the standard deduction is $6,350, as we've discussed, for the single person. It's $12,700 for the married couple. So there's the subtotal, line 41. And then the 2017. Remember, the personal exemptions are going away in 2018. But you reduce your taxes, you reduce your taxable income by an additional $4,050 for the single person, $8,100 because there are two of them in the family, for the married couple. And now your taxable income for the single person, line 43, is $39,600, $29,200 for the married couple. We go into the tax tables and we find that the single person is paying $5,645. Yeah, that's a good chunk of change, isn't it? The married couple is paying $3,451. So how can we reduce our taxes? Well, let's go buy a condo, all right? And so we go out, we do the, we'll discuss this in detail in Chapter 7. We do all the pre-screening, pre-qualifying. We scrimp and save to get our down payment. And we buy a condo at the low end of the market here in San Diego. And now this is what our Schedule A looks like. Slide 41. This should look familiar. This is A King's Schedule A, right? $1,000, excuse me, in state income taxes, $2,900 in property taxes. Let's say I don't know, whatever. And then the DMV property taxes, $200. The mortgage interest, $14,400. Does that sound? Yes, that's typical, folks. If you've got a mortgage of $360,000 at 5%, you're paying. I'm sorry, 4%. You're paying $14,400, and interest rates have since gone above 4%. For a while there, they were kind of stuck at 4%, but they've inched up. Where they go, who knows? By the time you read this, they could have changed. But so let's say he got a really good deal on a great mortgage, and he's paying $14,400 in interest. That's $1,200 a month, folks. He paid $500, or whoever this person paid $500 to gifts to charity. So there's the total itemized deductions. That should look familiar. If not, go back to the previous presentation and look at the Schedule A. So now, what happens to their taxes? Well, remember, they both have an adjusted gross income of $50,000. Instead of the standard deduction, now they take the $19,000 of itemized deductions. Remember, you take the standard deduction or the itemized deduction, but you can't take both. So now the subtotal for both of them is $31,000. The single person gets to deduct $4,050 for personal exemption in 2017, but in 2018 they go away. And for the married couple, that's $8,100. So now the taxable income for the single person is $26,950. For the married couple, $22,900. Now we go back into the tax table, and the single person's taxes are $35.80. The married couple, $25.06. How much did they save? It turns out the single person saved a little over $2,000, which is not bad, but that basically pays for the HOA fee, maybe not. And the married couple is saving, what, $80 a month, not even? So for married couples buying at the lower end of the housing market, the tax savings are not as large as the real estate agents make them out to be. Now, am I trying to dissuade you from buying a condo? No, not at all. I had a real estate agent jumping up and down screaming at me saying, "What are you trying to do? Keep them from making the best decision they'll ever make." Well, I don't know necessarily if it's the best decision they're ever going to make, but sure, buying a home is a great decision for many people. But it can be a disaster for some others, depending on when they buy, as witnessed by the Great Recession of 2008-9. But no, I'm not trying to dissuade you. I just want you to have your eyes wide open. And when the real estate agents jump up and down and tell you how much money you're going to save in taxes, you just sort of wave your hands and say, "Sure, buddy, sure, lady," whatever you say, knowing that it's not going to be that much in savings. Now, what happens once your income increases? Now we're looking at, on slide 44, a single person and a married couple who are pulling in $80,000 of adjusted gross income. It doesn't sound like a lot more, does it? Well, wait till you see how much more taxes they're paying. There's the standard deduction for the single person, for the married couple. There's the subtotal. You subtract the $4,050 for the personal exemption for the single person, $8,100 for the married couple, and now our taxable income is $69,600 for the single, $59,200 for the married couple, and we go into the tax table, and that single person is paying almost $1,000 a month in taxes. Over $1,000 a month in taxes. Almost $1,100 a month in taxes. I'm sorry, I goofed up. $13,145. And the married couple is paying almost $800, about $700 a month, a little less than $700 a month. So, boy, wouldn't we like to reduce our taxes? Plus, own a home. So we go out there and we buy a home in the upper end, maybe not the upper, but the mid-high, mid-range, right? Mid-high. And now our Form 1040 Schedule A, or Schedule A, looks a whole lot different. They're paying more in state income taxes. They're paying more in property taxes. There's the DMV taxes. Maybe they have two houses. And now look, a mortgage of $720,000 at 4% generates almost $30,000 in mortgage interest. They pay a little bit more to charity. So now their itemized deductions are $37,000. Almost twice what the other group was paying. Now be careful. The new tax laws limit the amount of state and local taxes to $10,000 and the amount of mortgage interest from the first $750,000 of your mortgage. So yes, this is one of the reasons that the law has been very controversial, very divisive, because many people are saying, you're attacking the high tax states like California, New York, and Washington, D.C., and other areas where housing is very expensive. Yeah, okay, so let's see what happens. Now, the Form 1040 form looks a little different, doesn't it? $37,000 in itemized deductions, reduces our adjusted gross income to $43,000 for the married couple and the single couple, and the personal exemptions, of course, reduce it a little bit further. So now our taxable income for the single person is $38,950, for the married couple $34,900, and now our taxes have reduced substantially. The single person is now paying $54.83, the married couple $43.06, and we see that the single person is saving, almost $700 a month, not quite, $650 or so, $650 a month. That's a significant chunk of change, isn't it? Yeah. And the married couple is saving about $300, a little over $300 a month, which is still not bad. Once your income reaches the middle to upper middle class level, a house is normally a very good tax shelter. However, now you must be mindful of the limits imposed by the new Republican tax cuts. Some states have already declared they're binding together, and they're suing the federal government to overturn the new limits. So, isn't this a turn of events? The Republicans are often the first people to yell, "States' rights, states' rights!" So let's see how they react when the states start jumping up and down, screaming and saying, "You are encroaching on us." It's not going to be pretty, folks. We're screaming at one another. We're not listening, and I guess the person who screams the loudest wins, right? Is that how it works? Anyway, should you buy a home? Yes. Should you buy a home because of taxes? No. Maybe. It's up to you. But buy a home because it's a home first, a tax shelter second, in my humble opinion. Slide number 48. How about that home business, huh? Remember the $299 stereo that wound up costing us $535? Well, if it is a legitimate business expense, that same $299 stereo would cost us just $319. Huh? Well, you have to pay the state sales tax. Unless you plan to resell it as retail, then you don't pay the state sales tax. But assuming you're using it for your business, you get to deduct the state sales tax as a business expense. When would a stereo be a legitimate business expense? Well, let's say you're a DJ, right? Or you have a storefront or a waiting room office where you want to play music. Indeed. And so, should you start a business for the tax reasons? No. The IRS is going to eventually say it's a hobby. You have to continue to make money. Eventually, the first couple of years, 3 years, you can lose money, but you can't continually lose money, or they'll come in and say it's a hobby. Now, there are exceptions to this, which yours truly has a little story, that because he was involved in a situation where I wound up doing the taxes for a partnership. It's my niece and her friend, they started a theater production company because they're both thespians, which is a fancy word for saying actresses, and they did pretty darn well. The first few productions were, very dirt cheap, but they made money. The tickets actually made them money, so we dutifully did the taxes for them. And then what happens, I guess this happens in any theater production company, eventually you start taking on more and difficult and expensive productions, and the critics start saying, why don't you do this? You need to have this and stuff, and that costs money. So they started losing money on their productions and, getting more critical acclaim, but not making any cash. So I said to them, I said, I don't know if you can continue to lose money because the IRS is going to say, it's a business, you got to make money. And she said, well, what should I do? What should we do? I said, well, let me call them. Let me get in touch with them. It took me a while, but I finally talked to the right person who asked me, well, what kind of business is this? I said, it's a theater production company. And he roared with laughter. He said, you go right ahead and lose as much money as you want. I guess theater, that's why exactly. Theater doesn't make money. That's why there are corporate sponsors. The tickets very rarely cover the cost of the production. Opera's even worse. And those tickets are not cheap. So we will discuss home businesses or starting a business later on. But again, you don't start a business for the tax reasons. You start a business because you have something to contribute to the society and you want to make money. You have a product, a service to offer that is worthwhile, and the best of luck to you, because I love small business personally. Slide number 49. Donate your car, get a tax break. An all too familiar spiel we hear from charities these days is that you can donate your car and get a $2,500 or whatever tax break. Well, in the 25% tax bracket, a $2,500 deduction is worth $625. And you might only get $50 in cash if you ask the recycling yard to come and get it. Maybe they say, this isn't worth anything. Not a bad deal, huh? Well, no more. The IRS said this was being abused. So now the charity must immediately sell the car and tell you the actual amount that they received for the car. Because Father Joe's Village does not want the car. They want to turn it into cash. And that's exactly what they do. And I think, my understanding is that all the charities in San Diego County use the Jewish Family Services charity. I'm not sure. That's what I've been told. I don't know if it's true. However, if you don't itemize deductions using Schedule A, and instead you take the standard deduction, then, you don't get to take advantage of the deduction because you don't have enough atomized deductions. So many people have been, shall we say, burnt by this tactic, and they get angry. They go to their tax preparer and say, look, I got a $1,000 voucher from Father Joe's Village for donating my car. And the tax preparer says, well, do you have any other deductions? Do you own a home? Did you have a lot of medical expenses? Oh, no, that's pretty much it. And the tax preparer says, well, we really can't use that because you as a single person get $6,350 standard deduction, and you wouldn't want to itemize deductions if it was less than that. And then they get angry. Then they go back to Father Joe's village and yell, "What's the matter with you? You told me I was going to get a tax deduction." And it says right on there, "Consult your tax prep professional. You may be able to deduct this. You may not." And so people get angry. So don't. If you have something to donate, donate it. Not because of the taxes. Donate it because it's good for the society, in my humble opinion. Slide number 50, the bottom line. What is the bottom line on taxes? Pay your taxes. Quit complaining. All right, don't quit. Complain all you want about the bums in Congress and wasting our tax money on refrigerators and the Air Force One and all this other stuff. But death and taxes, folks. Well, actually, Ben was wrong. The only three things that are certain in life is death, taxes, and tax law changes. And if we want real tax reform, folks, all we really have to do, in my humble opinion, is to require the senators and representatives in Congress to do their own tax returns. They don't have to do their own tax returns. One of the perks of being a senator or a congressperson in the House of Representatives is that I think it's the General Accounting Office, or maybe the IRS, somebody comes up onto Capitol Hill and does your taxes for you. So what do you care if they're incredibly complicated? Don't hold your breath. Instead, become a CPA or tax preparer. You will be guaranteed lifetime employment. And where would you start? Volunteer at the VITA next year, and you will be awesome. You will be on your way to learning how to become a tax preparer, or a CPA, or an enrolled agent, or a tax attorney, and guaranteed lifetime employment. We can do it, folks. I know we can do it. We've done it before. We've come together before. It's harder now. I know. I apologize. Not my fault. But as a citizen, I apologize on behalf of all fellow citizens. We need to work together to fix the tax law, but don't hold your breath. That is our discussion of taxes, everyone's favorite topic to hate.